Welcome to Worldview Investing's Market Update service. I appreciate you signing up for this free service. This is our first market update, so hopefully you had a chance to watch the introductory video sent earlier. I'm going to keep it brief with this market update because there's not a whole lot of news on my radar this past week. Been busy with a lot of things. Anyways, if you've read the Worldview Investing ebook, one of the things you'll pick up from that is that I really like material stocks and commodities. And there are a couple reasons for that. The first is that those stocks and commodities offer protection against inflation. Another reason why I like those stocks and commodities in general is that they're easy to export. Load a boat full of coal and you can ship it anywhere in the world as long as the other country is willing to pay for it relatively cheaply. So I like them because they can be exported to whoever's willing or has the money to be able to pay for those types of things. Right now, it really looks like China is the big spender. The Economist had an article about Chinese spending. 14% of all of China's international spending is in Africa. We might wonder why that is, but it's really because Africa is a resource-rich continent, and China likes commodities and materials and whatnot right now because they're building and spending money. A particularly hot commodity right now in the U.S. is not necessarily price-wise, but export-wise is coal. Coal hit its highest export rate since 1991, thanks to a lot of international demand from China, Brazil, South Korea, and Europe. So there's a lot of exporting of coal going on right now. So why is this taking place? Well, there was a recent article this past week as well on CNBC about China and China's coming gross domestic product rate. Some rumors on that China was going to beat their expectations. On the U.S. news front, the most promising piece of news was from South Carolina, and South Carolina's move to make gold and silver legal tender, which would be following what Utah did. So the world is slowly returning to a gold standard with their reserve currencies, and this is going to be happening in the news over the coming years, I suspect, pretty substantially. Also, not on the good part of U.S. news, a lot of news about the GSA, the General Service Administration fiasco, which has been pretty amusing to watch. You know your country is in trouble when a department who is pretty much solely responsible for cost controls spends nearly $1 million on lavish Vegas parties. So that's not necessarily good news, but kind of entertaining news at the same time. Looking to one of our favorite countries, Singapore, the news is more logical. As scroll along here so I can keep up with myself. As the Washington Post reports, Singapore is going to allow for stronger currency in a bid to tame inflation. No surprise there. But it's what you like to see a country doing, creating a little bit of a deflationary environment to strengthen their currency and to strengthen their overall economy. So that is particularly like what we like to hear at Worldview Investing, and we've made specific recommendations on the past on how to profit from those types of things. So it's good to see some of our predictions coming to fruition. The Swiss, on the other hand, are strategically weakening their currency for the second time since we said to sell the Swiss franc. And it looks like the Swiss franc is getting ready to pass over its $1.2 franc threshold to the euro. Since the Swiss announced their strategic move to devalue the franc. So thankfully we got in and out of that investment in time to make a little return, but to not get clobbered by the systematic devaluation of the franc. Finally, one of the interesting things over the weekend, Brazil pretty much outed America and Obama for our inflationary practices this weekend at the 33 Nation Summit of the Americas. So that was pretty much the news over the past week, and that we've been watching and that we want to keep you all informed about. On the website where this article is, where this video is, you can find links to all of those articles below the video if you want to read up in a little bit more detail on that information. And we'll see you next week. Take care.